All right, let's jump into things. Where are we at? 10 past 10. Okay, so yeah, we'll start off with gold today because we saw sort of gold obviously sort of spring, I say spring back to life, but all it is just not dying at this stage. Um, we had some weak retail figures from the US overnight, and let me just pop these ones up. Where are we here? So these are the figures that we were sort of looking at overnight. So, see actually a bit of a, I didn't see the revisions. So the revisions actually sort of came down as well. But as we said, it was like 0.2% revised down to negative 0.1. Expected a tick up, came in negative. Well, I guess you could say it came in flat, but again, you can't really sort of trust these figures because they're always revised anyway. But came in obviously under expectation and in the wrong direction for anybody that was looking for US dollar strength. Same with the that was the core, and this was just a month-on-month normal retail sales, and that, in a sense, kind of you can say ticked up. What was it revised from? Revised from zero, went to 0.1, and just improved very marginally, but at a sort of lower rate. So both of those things are sort of USD weakness, based on the fact that when you're looking as to sort of whether at the moment all the data that's coming out is okay. You're putting it into two piles. Is it putting it into okay? Do they need to? Are we seeing the US slow down and then the Fed will be more inclined to cut sooner rather than later? Or are we seeing it as in the camp of, well, economy's not that sort of weak, inflation's still sticky, so, if we keep the rates high for longer, economy's not suffering, but we can tackle the inflation issue. And so it goes into one of those two camps and this obviously economically weak, people not spending money, well, you need to spur that on, and you don't want to sort of force a recession. So, inflation is still obviously sort of a sort of prevalent issue and sort of like a topic for them. But I think the sort of idea of sort of like, where it should be, as long as it's not going up, and to a certain degree, maybe not even if it's just sort of like, slowly going down. Um, as long as it's not going up, I think sort of recession takes the sort of lead in the Fed's thinking. So hikes are obviously off the table. Like that's not even a consideration. But uh, cuts is the question as to sort of like when. You know what I mean? Is it going to come sooner rather than later? Let me just fix this up. And if we sort of see weak economic news, well, that means that it's going to come more likely a little bit sooner rather than later. Anyway, so without sort of just garbaging on about that kind of stuff, we saw US dollar sell off on this because it falls into that sort of second camp or that first camp of okay, yep, we need to sort of potentially sort of bring cuts on sooner rather than later, stimulate the economy, avoid that sort of recession thing. So weak economic data, these are the kind of reactions we're going to start to see each time. We're going to see US dollar selling off. We're going to see, gold and that appreciate. So I'll flick across to US dollar quickly. As we can see yesterday, it was grinding all the way up through here. And then as that data came out, that's the reaction. And this is what you need to keep in mind every single time these bits of data are coming out, because these are the things that are really shaping not necessarily even just the outlook of what the Fed are doing, but the speed in which they're going to be doing that. As I said, hikes aren't part of their vocabulary at the moment. It's all about sort of cuts and when do they need to do it. So sooner rather than later. So with the US dollar selling off, we started to see metals appreciate a little bit. Still a lot of work to do. I mean, if we zoom it back out and have a look at sort of where we're coming from, we're still very much in this sort of like sort of medium, I'd say it's past short term now, medium term downtrend, but we're starting to see this is one, two, three higher lows. So, that means that the buyers are stepping up. They're willing to sort of give it a bit of a shot. They're not allowing it to come down to here. And if you watch my weekend video where I said this trade down here, just to me seems overcrowded. Too many people are sort of going, yep, it's breaking down, it's going to be going down there. So when I'm seeing that happening, I'm thinking, well, you know what, there's probably some money to be made jamming it up the other direction. Even if it is going to go down there, I think we do have a bit of a punch up to this area over here first. At a minimum, I reckon we could definitely see some breaks. There's some stops around these levels here which need to be sort of touched up. We've got the underside of this previous support over here, this falling resistance. I think there's a few things that say, okay, let's target this area and sort of see what's happening around here. So we'll see, particularly with US dollar selling off, people are looking, where am I going to put my money? Where am I going to put the funds? And so if we see, what I mean, US dollar fail a little bit more, we could see definitely a bit of a push up in gold and probably even a little bit in silver there as well. So we've got a little bit of this sort of triangle coming through here now. As you can see, we're sort of kissing the top side of it. It hasn't sort of rejected back down. If you look at these other rejections down here, even these ones, attempted, and then bang, gave away to it all. This one's popped through, little sell down, it's holding, it's consolidating. So this little period through here, if we sort of drop back down below 24 and definitely below 19, well, you're coming back down to 10s at least. And you could say that this is a failed effort here. Topside moves, if you can get a close up around 35, which is, again, what I sort of said over the weekend, because remember we had this push up on Friday. It consolidated this high level up here and then gave way and gave way and gave way because there's still selling to be done. And as I said, it's still in this medium term sort of downtrend. So, at the moment, or sort of since, almost about a month or so now, it gave away from these highs back here. 22nd of May, we gave way to these supports. And what are we at now? It's the 19th. So, yeah, almost a month now. I mean, had you been selling it, it doesn't matter what time, if you got it wrong, if you're swing trading, this is, if you'd sort of timed it wrong and you sort of gone up here and then sold it, up here, or maybe sold it after this thing here, it's just a matter of time and you've been sort of ticked into profit if you're holding those positions for a swing. So, the market still is looking at this thing and going, yes. I mean, look at these move down here. We had this move, was it this one here? Yeah, from the 80s was the biggest one-day move since 2020. I mean, there's some heavy sort of selling there, and that was on the back of the China news kind of article, sort of saying that they sort of halted their buying or whatever, and then obviously NFP afterwards. But for now, we are seeing lower highs, seeing an attempt out to the top side. We're seeing higher lows, so this little triangle's really sort of facing up. So this means that these levels over here, 35, really up to about 40. I mean, you technically want to get above 41 because that's the highest of these ones over here. These are your swing high positions. So above this is definitely a little sort of breakout area. So above here, that would be your breakout area. And that gives you sort of 41 for my price. I mean, you could see it sort of just tip into the bottom ones here, 53. But I would say comfortably, you probably get up to about 58. So it's about a 17 buck move with low risk, I would say. Obviously, sort of like, you can get in earlier and that. I'm still holding positions from 23.11, which, again, I'm not a hold trader, but at the moment, it just sort of feels like, you've held a couple of positions and you go into profit and back down and up and then back down. And so it's just, I got rid of a couple of Aussie positions last night and that continued on. So, I guess I'll sort of see how this one goes as it sort of kicks through. But certainly I would say the risk lowers once you get above 41 and you'd be targeting mid 50s, as I sort of said, from the weekend plan. So at the moment, consolidating topside here. Again, 11 o'clock's generally when we get our volume in. 11 o'clock has been seeing heavy sell downs the last couple of days with metals. So, I mean, do we buck that trend or does it just continue? If it continues, well, we know realistically probably where to be looking, probably around that 23.11. If it does happen to sort of shoot out the other way, this could be the time that we get the volume as it consolidates the high here, could add the volume that we need to push out the top side over here. But as I always say, Asia's good for about $5 on gold as far as I'm concerned. It's normally a pretty dead session. So, we'll see how we go. But we've got our levels defined, above 35, above 41, and then we're targeting 57. All right, so speaking of DXY, so this is the sell down. This is obviously lower time frame here. We can see the retail sales really had its effect down here. Came back into this support area, I cleaned up, I think this is the one, I cleaned up the chart a little bit here, just because, I mean, I love sort of going back and looking at the story and going, oh, I remember this bit, but sometimes it just gets so cluttered, it changes your perspective on things. It stops you being so objective with some of your views. And you go, well, hold on, wait, it's been respecting this line. It's like, well, you know what? Time for a fresh take. Clear the chart, redraw it. If it comes up looking exactly the same, well, that's great. Good on you. I mean, that's one of the levels. But certainly, sort of, I think sometimes you just need to start from a clean book. And so, yes, got rid of a couple of levels, made this very simplistic here. And if you watched the video yesterday, I was saying, look, the move, we had that little zone after that gap down. And I said, look, if we take out the gap, which we did, and then move up past that thing, we had a little alert here. I said 105.50. So the body fill was the area that I was looking at. And as you can see, came up here, 155 or 156 or whatever it hit. And then bang, that's where it decided to sell down from. So certainly these body fills, when you see this first, when you're in a sort of bullish momentum or bearish, it doesn't matter. But if you're looking for a little bit of a potential reversal of a trend, and this isn't necessarily reversing down here, I'll get to that in a moment. But when you see this negative day or the opposing day, then the third day is a good chance. Generally, these things don't sort of just go boom and melt straight back down. It'll come up here. It'll try and sort of suck in as many people as it can, hit whatever stops it can, and then it'll come down. It would have liked this to sort of melt down and sort of like close down here. As I said yesterday, under 105 is a safer bet that we're going to see a continuation move to the downside here. But certainly that push up yesterday and then sell down is showing that, look, the market, give it the right conditions, they're happy to sell it. And look, this is why we've got these areas marked out. These are our sell areas. So we get above these wicks, well, we go up to the next areas over here. But for now, we've got a little bit of a sell down. It's overbought. It has crossed over actually to go a little bit bullish for this one here. So, I don't think we're going to be sort of seeing straight meltdown here. But yeah, as I said, if we see gold running, that could be putting more pressure on DXY. Certainly, those retail sales coming in a little bit weaker has made the market sort of think, a little bit more about their big dollar buying spree. Because remember, they're not hiking. It's not even part of their conversation. They are going to cut. It's just a matter of when. So do you want to keep buying US dollar on the idea that the cuts are coming? I think that's going to put a little bit of a cap on topside moves for it. I mean, look, this could still charge through and come back over to here 106s or even go above higher. I mean, DXY, as I said a couple of times, it loves to do these moves where it sort of looks like it's dying and then it jams up higher. Looks like it's dying and then it turns out it actually goes up over here. So, you know what I mean? You can't guarantee anything. I think, as I said, under 105 would, for me, sort of say that, look, we've got sellers here, and then you'd be looking to these lower zones over here, the body fills of these ones down here. You get under there, well, then you can be looking at 104 again. Certainly work to be done, but at the moment, we know where the sellers are. It did find a support in an area where and as I said, we put this, well, I put this line, this little area through here because we can see, as you can see here, it's been a support area. It's been resistance. We've cut through it. This chopped through it. This was just garbage price action. But it's finding support through here. So as I said, under 105, or probably you could almost sort of say under 110, 105.10 now, but certainly under 105, I would say you were going to see a little bit more of a sort of weaker push to the downside there, and we'll sort of see, that'll give metals a little bit of a boost, give Aussie a bit of a boost. We'll probably see, copper's a metal as well, so we'll probably see a little bit of a push up on that one as well there. So they're the levels you want to see. If it does come up and takes out that wick from yesterday, well, we're seeing the same sort of move of this. Even despite bad news, it rips up to the top side. But the fact that it closed bearish with quite a high wick, I think it's at least worth a shot down to test this lower level down here and break that wick. And then we're looking back down to 104.65. This kind of area we'll be targeting. Okay, flip across, got Aussie. So Aussie, as I said, sort of kicked back to life a little bit. here. So which Aussie chart are we using? Let's go a bit of a cleaner one. So yes, as we can see here, Aussie sort of, I mean, we had the RBA out yesterday, and the rates were held flat. So that wasn't a shocker. I mean, there was a very, 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 very marginal chance that they were going to do anything, but realistically, what I mean, it takes a fair bit for people to hike at the moment. You see a lot of commentary where they're sort of saying that, look, just do it, just get over and done with. And look, I've thought this for a while about the RBA. For some reason, I mean, this Bullock chick seems to be a little bit more hawkish than Lowe, but I mean, Lowe, given his track record, is questionable at best. This is the guy that said to us, we're not going to see we're not going to see any hikes till 2024, and then he hiked 10 times, 12 times or something. I mean, the credibility absolutely shot with that bloke. But the RBA is slow to act. They're slow to cut. They're slow to hike. They're slow to cut. You know what I mean? It's too much of a sort of, without getting political, it's too much of a lefty leaning kind of thing in that, and we don't want to upset people's feelings. But you're doing at what cost? You know what I mean? The economy just gets screwed by these things, by being slow to react. So I don't think they're really doing anybody a favor except for sort of saving some feelings, but whatever. Anyway, point being is yesterday they came out with part of their wording was we will do what needs to be done, which is almost like Fed speak. Yeah, that's how the Fed talk. We will do what needs to be done. It's hawkish. That is kind of like, you give us the data that supports it. I mean, that's that line is RBA. You know, we're waiting for the data. We're not ruling anything in, ruling anything out. I mean, Bullock even said that. We're not ruling. She said, "Oh, I've got to say it. We're not ruling anything in. We're not ruling anything out." I had a chuckle because they know how stupid it sounds because they say it constantly, and you know what I mean. They don't do anything, and then the data comes and they don't do anything. So anyway, point being is they've actually for once sort of come out with some sort of vaguely hawkish tone sounding stuff. And Aussie got a little bit of a push off the news. So if you jump onto the lower time frame, we can see this is around this period here. Off the actual rate decision, pretty flat. It went down a bit, went up a bit, but realistically just stayed flat. Then we had the press conference, moved up a bit, and then bang back down. But the thing is with this, and like I've said 100 times, Aussie can be great, but realistically, end of the day, it's only what's happening with the US dollar. And that's why we chart DXY, because DXY, although yes, it's not made up with Aussie, it is a broad sense of US dollar buying across the market. You want to see what the market is generally doing with US dollar, have a look at DXY. And they were buying it up. And so it doesn't matter if we're coming out sounding hawkish or doing this kind of stuff, unless you put your money where your mouth is and you hike. If they buy the US dollar, well, bang, back down here. And as you can see, sort of moved up to the top side only once the retail sales started to see US dollar sold off across the board. So if we have a look at the lower time frames, because this was the move we were looking. So price target did get hit, sort of through sort of US sessions. So we did sort of take profit a little bit. I took a little bit of profit as we hit this area here. And at first it looked like bang, we've done well, come back down here, and then still grinded through, coming up a little bit higher here. So, interesting to sort of see what they do with it today. As I said, if they sort of drive US dollar up, well, that's it. Aussie push back down. If we have a look at this actual sort of sell down through this period here, and we look for the retracements, you can see we're coming just over the 61% now. So we're coming up into a bit of an area where we've seen the sellers on this way down. And Aussie, failed. Again, 67 is the big line. 67 is the main level for it to get across. So let's get this one out of here. So if you get above 67, we're going to see some moves. I mean, realistically, probably 67 across here. I would say this is probably the level you want to get above. 67.11. I mean, there's other levels of sort of historical kind of, so by historical, I mean start of the year, levels of resistance along there. But in the short term, you can see since, again, it's about a month since gold sold down, Aussie has just been sideways, more or less, up and down, just in this long range. So yeah, above 67, excuse me, 67.11, things could get a little bit interesting. We just have to sort of see how they decide to play it off that sort of weak retail figures. If we do get a little bit of a push, well, again, 75 and then 67 are your sort of short-term targets for what we'd be looking for. It doesn't mean that we're necessarily going to go out the top this time, because as you can see, every time buyers are down here, sellers are up over here. They're just playing the range. And for the time being, once you get up over here, you take some profit. If it does go through, well, you got your runners. If it doesn't, bang, back down and on with the range. And on we go. Copper. Yeah, I think there's something up with the copper chart. I noticed this before I clicked on. I'm like, here we go. But of course, if you look at this number here, it's 44,000%. So yeah, I think there's something a little bit off with the copper chart at the moment. But if we actually get down to, this is how long it takes to get back to natural levels. If we do see where we're actually at quite an interesting point here, because obviously we've been getting this big sell down, and it's rounding a little bit. Let's get onto a lower time frame. This is the supposed candle here. Oh, it's turned into a wick now. It was a candle before. Anyway, it is coming to the top side of this little channel that it's respected a few times. So we can see that, this is the channel that has been working. With channels though, what you tend to find is, when things start to move away from the continuation of the channel, i.e. as in not moving down to say 42, 4, this kind of area over here, when you start to see a break away from the continuation of bottom, top, bottom, more or less top, bottom, top, you would expect this next move to have dribbled and sort of come down over here. That's continuation of the channel. The fact that it's pulled away from the continuation of the channel is generally an early sign that we might be seeing a little bit of a turnaround. Now, because it's been so choppy, there's quite a few little levels going through here. But the main levels that I'm sort of looking for to get above would be this one here, and then your wicks. This one here, and then up over here. These are your kind of levels. And as you can see with the thing, I cleaned up this chart as well because, again, it was just getting too many different things. And you get to this thing, it's called analysis paralysis, where you just got so many different ideas and so many different things flicking along that it just becomes a little bit, well, hold on, wait, this contradicts that, and which ones actually is it referring to, and which ones it's sort of abiding by, and yada, yada. So keep it simple. We've got the thing coming down here. We see it coming into a little bit of a wedge as it's sort of pulled away from this downside, testing the top side here. Now we've seen the sell downs from these ones have been quite strong, as you can see in the past of that. So it came down here and then rejected, and then as it churned all the way down here. So a push down here, you're targeting bottom side, basically this level over here, or back around 438. A breakout of here. I don't think it's going to move like this. I did put some price targets a little bit higher just in case. But yeah, I don't think we're going to be seeing anything rocket out. I think if it comes out, you may see a bit of a push. But again, these are the swing highs you want to get above. So till it's above 46, it's realistically just at the mercy of turning into a sideways range along here. Get above 46 and then obviously above 47, and then you've got something going on. And then you can look at these other levels up over the top over here. But that's obviously got a fair bit of work to do before you go to get to these levels. So the here and now is get out of this channel. We're testing the top side. Let's see how they go with DXY this session. If they sell DXY off, I expect all metals to appreciate a little bit. Could be enough to get us out of the channel, could spark things on. You see gold push up, you see copper push up. these kind of things will run together. If this rejects down here, I think it's gold is coming into its little resistance as well. I think this is going to reject down, gold's going to reject down. So watching for one to use as a bit of an indicator barometer for the other. And finally, with China, it's just grinding back up. Like every time, I mean, look at these sell downs. Look at these big fat candles here. And the market goes, oh, great, give us a shot to buy it down here. Shoot it all the way up over here. It's actually taken out those highs. So, we're going back to, back to April, where we've been back at these levels. So, that's 2 months. What's this? Yeah, just over 2 months. And it's just really picked right back up from all the way down over here. So look, it's grinding through. It's still in this little sideways range. We've seen it be at these levels previously. So you get above sort of 728. I don't think there's too much of a sort of cause for alarm. But again, sort of if it does go out the top side there, that's going to open it up into the mid 730s. I still think we may have a little bit of a sort of push down over here. We are seeing a bit of a negative divergence now that I'm just having a quick look at this. So if we look down this little part here, the old neg D, and then we have a look at this last push up through here. This is a negative divergence. So you can see it's actually technically put in a new high. Buying pressure hasn't come up to match it. It has sort of tipped down a little bit. So if you take out these lows down here, that's a lower low on it all. I'm just going to call it short-term cooling off, because it doesn't mean it's turning around. It just means that this push is probably going to sort of calm down a little bit, because as you can see, that last push up got knocked on the head. I mean, this is on a 4-hour chart, so again, this came in pretty much. This candle here was the retail sales, but they're buying it back up again. So take out these lows, you probably see a little bit of a cool back down to these lower levels, but really, again, it's just in that range. It's not really too much you can say about China. Okay, so look, that's pretty much it from me today. I think we're pretty light on the news coming through here. Yeah, look, there's not really anything through Asia, as you can see. We do have the pound CPI coming out 4 p.m. Melbourne time. Looking a little bit of a tick down here. Really sort of getting these numbers quite low, actually. Sort of year on year, they're down to 2. They're targeting 2%. 2% is like the golden number that people have sort of been looking for. So talk about sort of beating inflation. But, you know what I mean? Wait to sort of see how that one comes out. And again, rest of the session, pretty quiet. Nothing really sort of much happening. Got a bank holiday in the US. So that may make tonight a little bit quiet. And then tomorrow, yeah, normal sort of unemployment claims. That's about it. All right, that's it from me.